Hello, traders. It is Thursday, May 7th, and we're about halfway through the trading session today. We had a nice, really big gap higher, and stocks have been able to hold those gains for the most part. You can see the gap up right there. We went through a sideways consolidation period, and then we had one very long green bar that took us through the high and also challenged the high that we saw back a few days ago. Tuesday's high, actually. You can see right there, we were able to poke through it, but we've got some tails above body forming here, got a little bit of a pullback. There are some clues today that I want to discuss in the price action, and the market is reacting to overnight news from China. Their exports were up 3.5%. That was much better than the 15% decline that analysts were looking for. Their imports, however, were down about 14.5%. So that was in line with expectations. So they're not importing a whole lot. They were exporting a whole lot. The theory there is that they had a backlog of orders and that they were basically just filling those orders. Also, medical equipment exports accounted for about 3% of that number. So without medical exports, it would have been roughly a flat number, still much better than expected, and lots of optimism that, hey, China's the litmus test. Whatever happens in China, probably going to happen around the rest of the world. If China's starting to do better and they're reopening, then that's going to bode well for everyone else. The problem with that theory, at least in my eyes, is that China's fulfilling backlogged orders. They are not filling new orders, and I think that the economic recovery is going to be very sluggish. When I look at reports from corporations, for instance, McDonald's, they're reporting same-store sales are still very, very lackluster in China, and the consumers are reluctant to go back to their old patterns right now. They're also very cautious. They see that this is spreading around the rest of the world. Everyone's worried if their job security is going to be good once the recovery gets underway. Or is this just going to be a temporary pop? Everybody gets back to the work in the US, the PPP stimulus runs out, the orders aren't there, the foot traffic isn't there, and then the jobs aren't there. That's the downside to it. And I feel, given that many states are still extending the shutdown, New Jersey being the most recent, that this recovery is going to be much more prolonged than anyone is expecting or than the market is pricing in. So let's take a look at the action on a 5-minute chart. We'll zoom out to the daily chart first, though. And on a daily chart, you can see we've gone nowhere in the last couple of weeks. Lots of back and forth action in here. Up one day, down the next. Up one day, down the next. Big gaps up, then sell-offs. So the net change has been zero. Asset managers are sitting on the sidelines waiting for any kind of signs of strength that they can latch onto. Earnings season didn't provide that. Corporations are yanking their guidance for the most part. The one thing I'm hearing is Q2 is going to be a lot worse than Q1. So we have that to look forward to. But also, asset managers are going to have to wait for another 2, 3, 4, 5 weeks to see what happens as the states reopen and to monitor very closely what consumers do. So they're going to be watching traffic in malls. They'll probably have satellite imaging of parking lots. They'll be gathering all of this data to see if things are on track. At least the people that I talk to, they seem to be a little bit more hesitant now than they were 3, 4 weeks ago. 3 or 4 weeks ago, yeah, the virus will run its course, everything will be fine, we'll be right back on track. Now I see everyone in stores wearing masks, and the friends and family that I talk to, the tone has changed. I think people are a lot more cautious right now. So, as far as being short the market, I did short the market at SPY 287. We're going to be covering that today. We tried to buy back at 287 early this morning. We just missed that buyback by about 20 cents. So, hopefully, we'll get another chance to do so. But I don't think that we can short until the market gives us a really nice, defined technical breakdown. And I'll show you an example of that. And I also feel that the market is pricing in great news. You have zero interest rates right now around the world. So to park money in bonds, you're actually losing money because the uh, rate of return is negative on a real basis because bond yields don't keep up with inflation. So asset managers are putting money into equities and they're saying, what the heck? I am going to try and generate at least some type of return. I'm going to err on the side of being long the market because the alternative is to definitely lose money in fixed income. So you can see here that we had this really nice steady grind higher last fall. And then all of a sudden we heard about coronavirus and the market had really discounted the news. See, this is January in here. Thought nothing of it, didn't really care that China was shut down or that they had a virus. And then we got a little bit of a drop right in here, but instantly found support and the market rallied and actually made a new high. And this was, again, asset managers plowing into the market saying, we'll ride this little virus thing out for a few weeks. It won't be a problem. We've got to be long. We have to own stocks. So the market rallied, and it wasn't until we had that big drop and then that subsequent drop right in here. Now, that's the type of technical breakdown that we can buy puts on or get short. And there you can see this upward sloping trend line. And here we had just a one-day event blip, no follow through. We had a bounce, really couldn't take out that prior low. We didn't have two red candles back to back. And then we rallied up. Now here we've got that big drop, have another big drop, another red candle. Okay, big gap down here. Now we know we've got bona fide selling. Well, that's what we have to wait for right in here on a daily basis. I know a lot of people that feel the same way that I do, that this recovery is going to take a very long time, are eager to buy puts. Well, we can't do that until we have that type of breakdown. So on a GTC basis, we're going to draw a nice gradual sloping trend line here. That will continue to extend upward. That will be one thing that we can follow to give us an idea of when we would want to short. But we need to see two back-to-back long red candles, and then we'll know that we can take some short positions, and that will only come on the news that the recovery is slow and that consumers are not going back to their old spending habits. Until then, every little shred of great news that comes out is going to be the focal point, and all the other supporting news that tells us that the recovery is going to take a very long time will be discounted. And that news that we've gotten this week, ADP reported that 20.2 million jobs were lost in the private sector. That report came out yesterday. They process payrolls for small and medium-sized companies, so they know how many direct deposit checks there were. This is a really current number. I think it's a very reliable number. I lean on it more than I do the unemployment report, which is going to come out tomorrow. It'll be the worst that I've ever seen, that anyone's ever seen. So we have that to look forward to. Is it going to weigh on the market? I think right now everybody's expecting that there was just incredible unemployment across the entire nation. You could see it. There aren't any cars in the streets. There aren't any people walking about. There haven't been for weeks anyway. Now we're starting to see that a little bit more and more. So the one thing I can tell you is that as I'm day trading, I'm seeing a lot more opportunities on the long sides. When I look at stocks and I look at technical patterns, it's much easier to get long than it is short right now. And the market is back above that SPY 289 level, excuse me, the 288 level. It's at 289.30, so you have to favor the long side right now. Let's take a look at the 5-minute chart, tell you what I see for this afternoon. I see that we got through this breakout right here and we ran up and we were able to hold that gain really, really well. Normally on a spike like this, they're trying to flush out shorts and trigger stops. So that shorts come in, buy, they cover their short position, and then usually buyers will come in and they'll be vulnerable to any kind of market pullback. So you'll get a spike like this, maybe an inverted hammer like that, and then a red bar, and gradually you'll sink back into the range. That's typically what happens. Now, what happened today was that there were so many buyers lined up and they were still supporting the market up here that tells me that there is a very strong bid to the market today. So I believe that we're going to see a closing rally today. We may even see some follow through tomorrow. I can't justify it. Don't need to justify it, but there's a chance that we could actually rally up to SPY 300. Not today, but in the next few days, very possible. Let's put up those major moving averages. You can see the 100-day and 200-day moving averages are converging at 300. That is going to be formidable resistance. And I don't believe that we're going to be able to get through that unless there's some really good news that people are getting back into restaurants and that they are back to work and that there's some optimism on the consumer side. That's the missing piece of the puzzle. That's what everyone's waiting for. And while that's happening here, we also have news from the rest of the world because other countries are also starting to open their economies back up. So as I sit here right now, I can tell you that I feel that there is going to be a shorting opportunity coming up, but we cannot take a short position until we have a technical breakdown, and that may not come for 3 or 4 weeks. We need evidence that people are really reluctant to return to their old lifestyles. If everything opens up fine and the market continues to grind higher, then we can also trade that side of it, but we have to be careful as we approach that major resistance. I think we've got about 3 or 4 weeks for all this to play out. We'll probably see a lot of herky-jerky price action. Now, I do see a lot of industries that are really hurting. We just had Nordstrom's filed for bankruptcy today, J.C. Penney's. We've got a number of retailers. Crew just filed for bankruptcy. The brick and mortar retailers are going to really struggle. I think companies like Simon Property Group, a mall operator, going to struggle. It's a real estate investment trust. We've got airlines struggling. Anything travel and entertainment related is going to take a long time to recover. So let's see how everything plays out. Right now, we have to stay fluid. I'm keeping my overnight swing positions to a minimum and focusing on trying to sell out of the money bullish and bearish spreads when possible. So let's go through and take a look at a couple of picks that I think are setting up well today. I've got to keep this very short because I'm having some internet problems. Hopefully we won't have any during the presentation, but we're almost in the final stages here. So because of the market rally today and because we've seen strength at the high earlier today, there you've got a little bit of selling. We preserved that high right there. You can see the prior day's high was preserved and then boom, right back at it again. I think the market's going to rally into the close. That's what the early indication would be. We've seen late day selling the last 2 days. There was selling yesterday, Wednesday, into the close. You can see it there. And I'm going to go back one more day, and then you can see the late day selling that we had on Tuesday. And Tuesday, we were actually trying to push through to a new relative high. Everything looked great. We had this big gap higher, and then the market started to grind higher, had a little bit of a pullback midday, challenged that high again. Everything's looking really good. Whoosh. The rug got pulled out from under everyone in the last few minutes of trading. So this is a low probability trading environment from my viewpoint. I think that you've got to be very selective and very cautious with your day trades. You have to wait for opportunities to set up. You have to wait for those windows of opportunity. And then you have to trade reversals primarily using relative strength and relative weakness. I'm going to focus in on some stocks that look good on a swing basis. They should also set up well for day trading basis this afternoon. And I'm going to go right to my heavy buying list here. And let's take a look at a few of these. PayPal is a little bit too far out of the gate. Had a very good earnings report. You can see that. Breakout right there. PayPal, very, very nice. This could set up. It's bound to come back and check that gap in the next few days. Selling a bullish put spread somewhere in that gap would be a good strategy, but not right now. SQ, another payment processor, really nice breakout above the 100 and 200 day moving average. You can see earnings after the close. Very strong performance today. CRM is one that I like. You can see that it has not released earnings, so it's doing this on its own. Earnings not until 6/2. So you can see this horizontal resistance right here that lines up with that 100-day moving average. Today it broke through that 100-day moving average. I think that this is the type of stock that you could sell a bullish put spread below that 100-day moving average. Make sure it expires before June 2nd. So that's a trade that I would definitely consider doing. Let's see here. Piton was nice. Really big move. I wouldn't chase that. ENPH is a stock that a lot of members in the chat room have been on. This has been on a lot of our searches. When it got through the prior day's high, they were getting long. Really had some nice winners on that one. Keep taking a look, see what's on the list. Work, too choppy, no interest. SPCE showing a little bit. There's a nice cup and handle formation. You can see it, cup, handle. So how would you play this? I wouldn't right here, but I would drop a GTC horizontal alert line right there. If it gets through that resistance, it has a chance to go. PINS, after earnings, fell below the 100-day moving average. It's got to get back above it. Not very strong in my opinion. DraftKings, way hot. Good for day trading, but not my favorite for overnight. So out of this list, just clicking through this right now, CRM is one that I like. It's not too far out of the gate. It's right above that 100-day moving average. I think this is a nice entry point. Z was another stock that I noticed, similar in that it has not run dramatically higher, and we can still catch it when it's breaking out above that 100-day moving average. You can see that it came up, it tested the 100-day, pulled back, found support at the 200-day, and now it's been able to rally through. Long green candle closing on its high into this little gap right in here. I think Z is going to continue to be strong. So those are the two stocks that I would focus on for day trading this afternoon. And so Z was one of them. CRM was the other. They're not too far out of the gate, but we're using these searches all day long to find our relative strength and relative weakness. And I'm going into the relative strength search right now, taking a look, see what we've got in here that might be good. See if there's anything that I can pick off that might be really good. AYX reported earnings. I think I'm going to conclude it at that. You see the market starting to rally. Look for a late day rally today. We should be able to get through that resistance. We've still got some overhead resistance at 294. That was the high that we made a week ago. So that's another resistance. And if we can get through both of those, who knows? We might be able to challenge that SPY 300 level. That's all I've got for you today. If you like the content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. I promise you, I'll have some great picks in each one of them and lots of education. Thanks. Trade well. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.